All righty, traders. This is Blake Morrow. You are listening to the daily Roundup webinar. Hope everybody's having a great trading session and happy Monday to you. There's my video so you guys can see me. All right. Hope everybody's having a great trading Monday. I have to say this. I was having a conversation with K-Man just a little while ago about the yen and this move that we're seeing here in the dollar yen. This is a big explosive move, and you can see big breakout, right? And if you guys haven't been around for a while in the FX market, there's a good opportunity or a good chance, that this could be a serious move higher. If you think where equities are at right now and about, where equities are at, and you think about like divergent central banks, and he was making a good point to me, that look, Japan's like stuck eternally in and have been with low rates. But you could see other central banks really, start to move rates higher. It creates an environment for a massive carry trade, as long as stocks don't fall, right? As long as stocks don't fall too aggressively, you could see some Japanese yen weakness coupled with stronger currencies globally, whether it's the US dollar, you get carry trades really coming back in fuego. And if you haven't traded through like the early 2000s too much, you didn't know that was actually a thing. So if you can, you go back, let's just go back to one of the best carry trades at the time, like the guppy, for example, was a great example of one that, back here in the early 2000s, this whole move that you see here was predicated on, divergent central banks. Every central bank raising rates, but Japan stuck. That phenomenon fed into what we call carry trades. Now it has to be matched up with overall strength in US equities or equities globally, but that seems to be the case right now. And even if the S&P drops back to 4,000, like let's just say that happens, right? Which I think is a pretty good possibility over the course of the next couple months. We drop back to 4,000. What you're going to see with these yen pairs is they're going to be bought on dips. So as long as the market just doesn't come unglued, this trade might be around for a while. And so I think it's important to be respectful of it. Now, that doesn't mean that I'm not going to trade both directions. And that doesn't mean that I'm not going to, like right now, today I shorted some Aussie yen prematurely, right? I shorted some like right here prematurely, but I'll be happy actually if I can just get out with a flat at this point. But I actually expect a little bit more than that, but let's see, 100 and that should be a 88% retracement. So that's probably about right. Somewhere between here would be a Gartley, right? So it could be like that. It could be like this. I'm going to move it over just a little bit so you can see a difference in the moves. So, those are both Gartley patterns. It's just in between these two. So we can still continue to move, up a little higher, but I think the dips are going to be bought in Aussie yen, overall. And so we just have to keep that in mind as we move forward. There seems to be at this point in time a pretty big shift in what the yen is doing, and that was something that I was just having a conversation with K-Man about. And if you don't know who K-Man is, he's in the chat room. He's awesome, by the way. Ex-bank trader of many years, and been around the block. And it takes a certain special someone to stay in the institutional side and brokerage side of the business for that many years. That means that they were good, you know what I mean, or are good, enough to stay in the business that long. So, but that was just something we're talking about, and I'll tell you what, these yen pairs are really, really on fire. Big breakout in the dollar yen today. As far as the rest of the dollars go, I mean, you look at the euro, it's not doing anything. Very, very slow, moving markets right now with the rest of the currencies. I think everybody's kind of stunned and watching and trading the yen at the moment because that's what's moving. Sterling's just kind of sitting there, still rejecting resistance. The Aussie, it looks like we're stalling below the 618, even though we did push new highs, but you guys know support and resistance is not an exact science. Kiwi also maybe false break there. Dollar CAD, finding some buyers, but not very many. I mean, it's just kind of holding up. The US dollar Norwegian krona has bid up a little bit today. Dollar Mexican peso surprisingly is very strong. I have not figured out why it is, but it is. And I don't mind it because I got a little bit. So I wish I had more. Whenever a trade's working out for you, it always seems like you never have as much as you want. That's true statement, true story, right? But that one's, bullishly breaking out, and I'm sitting here going, why? S&P just kind of stuck in the mud for today, but I mean, we're higher, but marginally. And the NASDAQ, still hoping for, well, when we were back here, I was thinking, we're going to challenge the underside of that trend line. Well, for the most part, we have, right? I mean, give or take 50 points, which in the NASDAQ 100, 50 points is like, nothing. We're basically challenged the underside of that trend line. So, the risk at this point is that we move lower. Is it moving lower today? No, because, the tide is lifting all boats, if you will, NASDAQ included. But I think it is struggling, and maybe because we are looking at higher rates. So I think maybe the NASDAQ will underperform. Crude oil eased off of its highs, but still holding up pretty well. Euro Aussie, we just hit a 161% extension, 88% fib confluence. I would not say that head and shoulder pattern is anywhere near complete, but we are getting to oversold, divergent. So just think about that. And then also, I was going to point this out too. Well, the Rand. I mean, the Rand is up near its highs of the session too. That might not be a bad trade to the upside. That and the dollar Mexican peso, if we see gains slip away from equities by the end of the session. Dimitri said, shouldn't we see that interest rate differential reflect the Swiss pairs too? And that's the point I made this morning, Dimitri. I'm like, is it really an interest rate play? And I mean, well, I guess you were talking about, shouldn't that be different with, or I think Switzerland, remember, hold on. Let me tell you where their rate is right now. Hold on. Just give me 1 second. So they're still negative, right? 3/4 basis points. They're just trying to get people, not to be in the Swiss franc. I think it's more possible that they reverse and come out of negative rates. So maybe the Swissy might move like other currencies for a while. But if the carry trade continues and rates continue to go up, I would think that the Swiss franc might eventually weaken against other currencies as well, because I don't know how far off zero bound that they would come. So, right. But right now it's people thinking carry trade is going to be back in fuego. But anyway, that's it. Hey, you know what I'm going to be doing here in about 20 minutes? I'm going to catch up with Mark Chandler, and I'm going to ask him a little bit about this yen move, and I'm going to ask him a little bit about how he feels longer term where rates are going, and so be ready for an interview coming from him later, probably tonight or maybe tomorrow morning. So anyway, stand by for that. You guys have a great day. Good luck today. Remember, it is a holiday here in the US, not a significant one, but it's enough of a holiday where it's probably going to suppress volatility too much. So not a bad day to just, take it easy. Try not to get in too much trouble. Okay. All right, guys and gals, have a great one. Thank you so much for your support as always. And thanks for tuning in. My name is Blake. I'll catch you later.